Welcome to the Transparent FX Academy. I'm Nick and I'm a top podder on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently rejecting quite important structure. In fact, what we can notice is that exactly from here, this previous rejection to the downside was created when the market printed this red candle. This made this area become previous monthly resistance, which now that the market has broken it to the upside and is currently retesting it, is currently becoming support. And in fact, we can see how the market has already started rejecting this level to the upside, and more bullish continuation could be expected away from this zone. We can also notice that from a pattern standpoint, we had an impulse to the upside followed by a correction. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see that the zone that the market is currently rejecting is exactly the area in between the 50% and 0.618 retracements, which I have now highlighted with this box. And this means that actually we have confluence of support inside of this zone, because we have both the 50% and 0.618 Fibonacci retracements and this previous structure resistance, which is now turned support. This means that we have good probability of seeing more institutional longing inside of this confluence of support area that could make this market make the push breaking above this previous high. Because it is also important to keep in mind that if we look left, this is a quite important historical level of resistance. From here, multiple rejections to the downside were created. However, now that the market is inside of a strong confluence of support, if we start to see more institutional longing inside of this area, that could give the strength to this market to actually break above this resistance. Dropping down on the weekly time frame, what do we have? Now, from a weekly standpoint, what we can notice is that if we look at the patterns, the market has actually created this move, an impulse, a correction, a lower low, and an equal high. Now, if you see impulse, correction, lower low, and equal high, after that, what you would expect is a correction before then getting more bullish continuation, essentially for the creation of an inverted head and shoulders, with the left shoulder here, the head here, and the right shoulder, which the market should print at this zone. At that point, that would once again increase the probabilities of creating the move to the upside that we have already identified by looking at the monthly time frame. Dropping down on the daily from the weekly, what do we see? Now, from a daily perspective, first of all, I did speak about gold quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect this rejection higher. Again, from here, I explained all the reasons for which we could expect this correction, impulse correction, and higher high. And again, that is exactly what the market did. I also spoke about gold after this impulse. I explained why we wanted to see the correction, continuation, then a correction, and another move higher. And by the way, I will link in the description all these previous analysis, so you can go and check them out for more free education. However, at the moment, what do we have and where we could be looking for the next potential move? Now, as I was previously explaining, by looking at the monthly and weekly time frame, at the moment everything is looking quite bullish. But here on the daily, there's a bit of contradicting structure. But before we get into that, let's first go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big institutional players of the market. Now, what we can see is that with the last report, net positions have been increased. Institutions went from having 165k net positions up to having now 193k net positions, with 23,000 longs getting added and 4,400 shorts getting closed. Now, this makes gold stronger because as institutions are longing, that further increases the probabilities of the potential bullish continuation that we already wanted to see by looking at the market on the monthly and weekly. Now, here on the daily time frame, what do we have? Well, from a daily perspective, the very important level that we must identify is this one here. This zone is previous daily support, acting again as support here, which the market is once again breaking to the upside. As we have now broken back above the zone, if we will see another retest of the zone, since this is strong support, which has seen strong buying in the past, on the retest, we could see once again institutional longing, as we have already seen here. And at that point, the market could have the strength to create the move to the upside that we would like to see, as we have already done by looking at the monthly and weekly and now also daily time frame. So how we could be approaching this potential move higher? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point, we could be looking for a potential move higher for the market to complete that weekly impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading session software, which puts together everything that you need as a trader all in one interface. And if you scroll over here, past the testimonials, you will see that at the moment there is a massive special promotion, which gives you access to the mentorship program with a big upfront discount from $497 all the way down to only $97 one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if after you join the mentorship program, you open an account with them, you can get a full refund of the mentorship program directly credited back into your trading account. And if you scroll over, you will see that directly from here, there is still time to join before the offer expires and everything goes back to normal. And here there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. The link is also in the description and I will see you in it. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you. And I will see you in my next breakdown.